Thank you for joining us for this month's National Economic Outlook written by Local Market Monitors founder Ingo Windsor. Ingo is a graduate of MIT and Boston University, and he's not your typical economist. He has a knack for presenting complex facts in an easily understandable way. So without further ado, I'll turn it over to Ingo.
Thank you very much, Julie. Every month we look at the latest data to see what they can tell us about the economy and about real estate markets, where they are now and where they may be headed. You make better investments when you have a better idea of the forces that affect supply and demand. This month, not much has changed from last month. There's slow growth in the economy, but it's mainly driven by more low-paid jobs in healthcare, and especially by large investments in artificial intelligence. On the job front, these investments mainly show up in construction work, but they're an even more important element in the uncertainty of future growth, because we can be sure that many of these investments will be unsuccessful, and real estate markets already are in a wait and see position. The best way to see how the economy is doing is to look at the rate at which it's creating jobs. Jobs means consumers, and consumers are the US economy. Here we see the percent increase in jobs every month compared to the same month of the previous year. The trend has been downward for years and, despite some recovery in recent months, remains very close to zero. Jobs in the manufacturing sector continue to be lost. No one has figured out how to bring those jobs back to the US. Job growth in construction, after a long slide to zero, has recovered a bit in the past year. That's mainly because of sharply higher activity in the construction of data centers. But workers are still being shed in home construction. There's been a small uptick of jobs in the retail sector. I don't know why. And there's been fair growth at restaurants, but note that it's only 1% growth. Healthcare remains the main reason total job growth in the economy is still in the black, with renewed job growth now at nursing homes and especially in home healthcare. But in finance, jobs are being cut at an accelerating pace, very likely because of greater use of artificial intelligence. In the large business services sector, there's finally an uptick of jobs. But that's mainly because companies have finally cut all the temporary workers they no longer want, 500,000 of them. Companies that provide computer programming services, on the other hand, are still cutting jobs. Finally, the big government sector has lost some 300,000 jobs. Most of those losses were at the federal level and won't be repeated, but smaller job losses continue at the state level. And more worrisome in the long run is the slowing rate of growth in jobs at the local level, which is where most government jobs are found. These local jobs are a reflection of local economic health. In 200 of the 400 local markets in the US, total job growth in the past year is negative. What does all this mean for real estate markets, and why do I think they're in a fragile condition? First, mortgage rates remain high. Even with a new head at the Federal Reserve, they won't come down anytime soon. That's one reason why the level of new mortgages remains at record lows. But the larger problem remains that homes are too expensive, even if mortgage rates were lower. The boom that started in 2020 means the average home now costs 60% more. In Texas, one of the largest real estate markets, with a growing population and strong economy, demand for homes has been so weak that home prices have been almost flat. And this means that home prices are so fragile that an economic or financial shock, like a drop in the stock market or just further uncertainty about the future, will prompt a big downward adjustment of prices. I've been harping on this subject for a while, and so far it hasn't happened. But with a slowing economy, the risk hasn't gone away. That's it. In this time of uncertainty, it's important for bankers and investors to stay on top of local economic and real estate developments. Local Market Monitor provides the data and analysis they need with local market reports and investors' metro analysis. Thanks very much for following along. This is our National Economic Outlook. I'm Ingo Windsor.